I want to get to something that baffles me, and the man here is an expert. He's going to explain it to me. I want to turn to one industry that's streaming higher, gaming, eSports, also known as electronic sports, projected to become $1 billion industry this year. And you guessed it, there's an ETF for that. In fact, there's two of them. Investors looking to get their game on in the eSports hype have two exchange-traded funds to do so. The Van Eck Video Gaming and eSports ETF. The symbol here is ESPO. That's a market cap weighted index of companies involved in the gaming and the esports world. And just this week, the Nerd ETF, yes, NERD, also launched on the New York Stock Exchange. Its holdings include game publishers, streaming network operators, and hardware companies involved heavily in that space. Ed Lopez is the head of ETF product development at Van Eck and one of the masterminds behind this. Can you explain to me, I understand that people like to do gaming. I get that. Gaming's a bigger business than the movie business today. But watching people play games is a bit like a mind stretch to me, and yet the business is huge. How do you explain that?
That's amazing to me too, and that's one of the reasons why when we looked into it, we decided to launch this thing. There's a lot going on in the video game space. But to your question, I think it's a little bit like traditional sports. If you play traditional sports, you like to see other people play it at a really high level. Today, it's a new generation with technology that's really facilitated online gaming, interactive content, and new outlets for entertainment for a younger generation that play games, and now they have the opportunity to see people play games at a very high level.
Yeah.
And I think that's one reason why you're seeing this kind of.
So you went to a big game at, was it Madison Square Garden?
Yeah, Madison Square Garden. I went to the League of Legends finals a year or two ago with my son, and I have to tell you, it was one of the best sporting events I've ever been to. People are excited because this is a game they play.
Yeah.
And like Ed said, they get to see the pros play it. I'm not going to go play football at the age of 52, but I can play this game and then understand.
So it has to do with how heavily invested you are in that. If you're really into basketball, you're going to get excited. If you're really into
League of Legends,
you're going to get excited
Fortnite,
about it.
or any of these games.
Will people watch anything at this point? There are babies that are opening presents that are millionaires on the internet now. I mean, I don't know what it means overall. How's the fund doing? How did you create it?
Yeah,
you
we launched it late last year. It's 24 million right now. We had to go through the last quarter of 2018 with some of the tech stock stuff. Great attention. We've had some flows in, so it's doing well right now.
I noticed you have, it's a pretty concentrated portfolio. You have Nvidia 7%, Nintendo 7%, Tencent, that's the Chinese gaming company. That makes sense. 7%, 60% is just 10 companies.
Yeah.
There's just not a lot to buy, right? I guess.
Well, there's a universe there, and I think the key with the thematic ETF is trying to get pure play exposure. So for Van Eck, what we try to do is identify those companies that are earning a majority of their revenue from that space, and then providing a nice liquid structure for that too. So there's a couple aspects to introducing a thematic ETF. One is not only the pure exposure, but making sure you have something that can scale, that can provide a nice trading experience for people, so with tighter spreads. So you want larger companies, you want liquid companies, you want pure companies.
The video game industry surpassed the movie industry in revenues several years ago, and now I see, some research we did for this, eSports will raise over $1 billion in revenue this year. eSports, just people watching the video games, will raise $1 billion.
It's people watching, it's people, companies paying for media rights, advertising, video game publishers paying sponsorships to streamers. There's a whole new ecosystem.
So where does augmented reality play in here? Have you any sense that I'm a little, the whole augmented reality and virtual reality thing has sort of held back the last few years because the promise is not kept up with the reality, I think. But that seems like tremendous potential.
I would think so.
If you could put yourself in a dungeon with a machine gun, and it's like we're sitting here, and I'd kill you immediately, by the way, Dave. But that would be exciting. I'm just trying to get you excited over this.
I don't think VR is quite where it needs to be right now.
Yeah.
Maybe in time. I think one of the next steps for the industry is going towards mobile and going towards cloud gaming.
Yep.
Yeah. That makes sense?
Yeah, it totally makes sense, and I do think that this is a very fast-moving space. It's not surprising that the two funds here are very concentrated. Different approaches, slightly different portfolios, both of them actually giving you that pure play exposure, though, and that's generally the hardest thing. I've been on the show talking about some of these funds that I just don't think get it done, I think these deliver the pure play exposure.
Tell me you're a hidden League of Warriors, gamer or something like that, Nick.
I've got nothing on that count, but I do respect this as a global phenomenon. This isn't just in the U.S. It's even more important in China.
Yeah.
Hence the 10% exposure. It's a global phenomenon, and it's just going to continue to grow. Moore's Law will double computing power every 2 years for the next 10 years. Imagine the games you'll play in 10 years' time. We'll all be able to not just go to an eSports event, but to perhaps be in the game with the champion.
Yeah, and yet the assets under management are still pretty modest.
They're still pretty small, still a young ETF.
Yeah.
But I think there's still a lot of potential for the space. I think one thing a lot of people don't recognize or appreciate about the video gaming space today, esports is the tip of the spear. Video gaming is a $140 billion business. And what's happening is it's providing a venue for people to find that interactive online content, a place to hang out. It is, I think, going to help transform video gaming. So it's not just about buying video games. It's about an entertainment experience.
Yeah.
You have professional sports buying esports teams. It's going to be a big industry.
It's been a big year for esports, yes, with championships for titles like Fortnite and Dota amassing record price pools as the industry continues to take the world by storm. But despite growing viewership across the globe, it's been a tough slog for esports ETFs, with flows off to a rocky start. With us now is Will Hershey, joining us here on the desk. He's co-founder and CEO of Roundhill Investments, which owns its own esports fund with the ticker, get ready for it, NERD, nerd. It's too good, Will. Welcome to ETF Edge. First of all, tell us exactly.
First of all, are you a nerd?
Yeah, we'll start there.
We are. We're gaming nerds and we're ETF nerds. I think Dave might echo that sentiment as well.
Yeah.
So what are
Break it down for us. What is this ETF?
What are esports? Esports is really this growing global phenomenon of playing video games in front of an audience. Unlike other forms of media, there's really this second derivative that's been built on top of the core IP that is the games, and it's really something that we've seen started in Korea and China. It's now taking hold in the US.
What are some of the holdings of your ETF?
Sure, so one example is Huya, Chinese live streaming platform. So popular US platform Twitch is banned in China. Those clients are looking to different ways to get their exposure to watch their favorite titles. Huya is a name that we like. Coupled with Douyu, own a large majority of that Chinese game streaming market. Another example, Modern Times Group, live events company out of Sweden. These guys run esports leagues, esports tournaments. They're the parent company for DreamHack, which is kind of like, I would call them almost the Coachella of esports, as well as the Electronic Sports League.
There are a couple of competitors in this space, including your fund. Most of them go very heavily into semiconductors. Most of them have NVIDIA, AMD, Intel, Apple, Microsoft. You guys don't seem to have that. What's different about your approach to those other approaches that have all of these sort of, I would call, ancillary plays?
No, that's exactly right. And I think NVIDIA, AMD, both great businesses and kind of at the top of the game when it comes to GPUs and processing units for gaming. But really what we're trying to do is, when we're creating a thematic ETF, let's isolate this beta that is esports. Let's really provide people that core exposure and maybe not go outside the risk curve and look at things like Microsoft or Amazon that really aren't getting you what we're talking about.
What do you do? You talk about Asia. What do you do with a Tencent, which I would argue is the largest gaming incubator in the world and really at the forefront of a lot of the movement?
No, so Tencent's a holding in the portfolio, has a tremendous portfolio of assets, whether you're talking about Riot Games, which is the company behind League of Legends, or Supercell, which is actually probably the leader in mobile esports, which is something we can talk about as well. But Tencent's definitely a core when you look at it. It's almost a mini gaming ETF in terms of how many positions it has in its underlying portfolio.
But do you think these ongoing national security concerns could dent Tencent and some of these other Chinese companies from gaining mainstream adoption here in the US?
Certainly a possibility, and our portfolio is very much so global in nature, so holdings in Korea, in Taiwan, in Hong Kong. But really, I think if you're going to point out one of these risk factors, I would more look to kind of the regulatory environment that we've seen in China. We saw that in 2017, 2018, where you had actually a ban on new games coming to market. That's kind of one of those ancillary risks that we would point to.
As you try to market or pitch your ETF, how do you convince the Fidelities of the world to put money to work into gaming when it really tends to appeal to a younger audience?
That's a great question, and for us it always comes back to the data. You're talking about a gaming industry that's $150 billion this year, growing about 10% per year. That's larger than the music and film industries combined. 400 million esports viewers this year, growing to 600 million. I think it's only a matter of time before those larger investors start to catch wind of exactly how big this industry really is.
Biggest competitive threat, Dave, to this business?
Well, I think the biggest issue is frankly growing pains, right? I mean, unlike what we see in traditional sports, we don't have sort of franchise teams with multi-year contracts tracks where people can get to know the players. And at the same time, we've got the kind of protests we saw, say, in the NFL, starting to hit some of the esports teams around the Hong Kong protests. How different companies have dealt with that, I think, is going to raise the profile of the space, but also be a little problematic.
What are your thoughts on this space?
I love the space. I'm fascinated by the space. And when I look at some of the biggest companies in the world that I think nobody knows about, they're actually in the gaming space. And I guess my question is that it'll extend my view on the space into how portfolio construction goes on within the ETF, because I think people would like to know that. When I look at an ATVI, this is a company that on valuation is very cheap relative to itself. Call of Duty, the switch to mobile has been fantastically positive in the first month or two. How do you tactically move around in a space that I think some of these big boys are kind of beaten up right now? Do you go after that?
Yeah, no, and Activision's one of our largest holdings. I think when you look at the US publishers, Take-Two, EA, Activision's really the best position for esports. They have Call of Duty League, they have Overwatch League, where they're seeing franchise slots being sold for $30 to $60 million. Really impressive what they're doing. We're, at the end of the day, trying to isolate that esports exposure I mentioned. For us, Activision comes in at a higher weighting than those other companies, and that's really what we're trying to achieve.
The big push into streaming, Disney, Apple, does that help or hurt esports?
I think it's a little tangential, but I think you're going to see more and more of these companies recognize the value of this gaming IP. I wouldn't be surprised if we saw Disney go after one of these companies maybe as an acquisition target, although I'd caution that running a gaming business very different from running a movie or film
But
studio.
isn't this traditional content, and isn't this really the way people are consuming content and they're participating in content? So there's a big argument that if Disney or Universal, the parent company of this network, want to get involved in really the right demographic, or at least an evolving demographic, it's interactive TV, it's interactive sports. These are happening.
I mean, this is the future of live media, sports, and entertainment. Like, this is where Gen Z is spending their time and consuming content. It's gaming. It's really not. You listen to Netflix's conference call, they're pointing out their biggest competitor are these game publishers, not Disney. And I think that's really what we need to kind of understand. It's something that's taken place in Asia first, but we're just getting to the point now where it's going to take hold here.
Yep.